All right, Devils, happy Friday. Here we are, about 12:45, July 7th. I'll do some updates here. I think we'll stay crypto focused today. Let's look at the three majors. We'll look at Bitcoin, ETH, and Litecoin. Well, I started digging around at some of the alts here, but nothing that really struck my fancy. So let's just do a quick review. Now, of course, let's see here. Well, I think we were somewhere about here a week ago. So, it'll be a brief review. Just a primary count, same thing I've had for some time here. You can count it multiple ways, right? So recognizing that my primary, and I think many will have one of the two or both of these counts, 1, 2, and then yet again another 1, 2, and working on another 1, right? This would be the one of the three at this higher degree. We're still waiting to get confirmation of this, because you could certainly come here. We could certainly, it would be very valid. Jeez, I struggle with that every single time. You could still count this as a 1 and this is a 2, right? It would be a more shallow retrace here, because if I take this all the way back to here, now we're only making the 38. So you're kind of using typical fib relationships with regards to the swing structure and the depth of retracement. Not that there's any, market's going to do what the market's going to do. Excuse me, but I mean, it just seems to me to be logical to start with, right? You want to have perhaps both of these counts, but to start with, okay, well, technical pivot here. Oh, shit, I think we've looked at this many times here, right? So we're coming right out of a golden zone here, second target to the tick, a retrace to a 50. It almost doesn't matter. It almost doesn't matter if it's 1, 2 or 1, 2, 1, 2, 1, 2, right? So the Elliottian can adapt here as we go. Well, I mean, we all can, right? I suppose we can say that. But with regards to labeling for rules and guidelines, this is a high class problem, right? So if it's 1, 2 or 1, 2, 1, 2, right? It's really not going to matter. What matters here at this moment in time is we look at the market here, and we'll look at this on I'll just stay here for a minute. Do we finish this, right? We're all kind of waiting here, going, oh, okay, well, sure looks like a 4. Right? I mean, that's about as textbook a 4 as you can see, right? We're not progressing the trend. We're just going sideways. That's right. First thing you'd look for is to plant the 4 there. Now we're going to go up there and get this. We're going to get to the median line. We're going to get a bigger rip in the 5th. Do we stall here and then have to come down? Remains to be seen, right? But there's not much you can do here. If you're not in, I wouldn't call this a great place to be long, right? If you're not already long, oh, come here. Right up into that liquidity. I know, right? If I tell you not to buy it, and maybe that's the best way to get to fly. I'll tell you that would be a terrible place to buy, because it would be, right? It doesn't matter, right? What happens? That's just, if you continually buy it, areas like that, you won't be long for the markets, or you'll learn, right? You'll stop doing it. Now, I know, guys, I know, right? Like, that could fly out of there. I'm just saying, over time, if you're going to be disciplined about your entry, that's a terrible. I mean, perhaps the worst possible place you could enter, right at the highs after wicking all that. Now, again, I say that. I'm not saying that this can't just fly out of here. I'm just saying, in terms of developing technical skills, this would be an area where you'd look at and say, well, if it goes, I'm willing to let it go. But I would be so I can't possibly recommend anybody buy it there. I certainly would never buy it there. Again, but I've made, as I've said this many times before, I've just made the deal with myself. If it goes, it goes. If it goes, okay, great. All that happened is that I got confirmation here. I got an impulse. That's all that happened. So what am I going to do next, right? We'd have break of structure here. We'd have a completed 5. I'm just going to wait for the inevitable retrace, and buy it down here, right? So once you've got confirmation, so it shouldn't be a FOMO event. Okay, well, if it goes, great. Okay, right? If it goes, great. If it rolls over, okay, well, I didn't do something stupid, right? I stuck with a more manageable entry plan. A little disciplined, didn't give into the FOMO, because you can just feel the FOMO there. You can just feel it like, oh God, it's going to go. Right? Somebody bought it here, right? Every time, same. I guarantee when they were buying it, oh, it's going this time. It's going to go. Same as over here. It's going to go, right? Right? There's always a buyer up there. Thankfully, right? So let me, let's kind of, by the way, does anybody else hate this new way they're doing this as much as I do? I literally can't stand this new way that they're doing it here with TradingView, and apparently we're stuck with it. Oh, let me get over here to BitGet, right? That's our sponsor. So when we dig in a little bit here, we'll go over to BitGet. Links underneath, right? If you're looking for an exchange. What do we do with this, right? So we had been considering this as a completed impulse for a 3, and maybe we were working on a 2. At this point, there is no, shit, I mean, it probably can be counted, but I think this is so typically 4-ish price action to try and dig a 2 out of that. I think, I mean, can it be done? Is it possible? Yeah, but that's not what I would be thinking here. I mean, really, if you look at it here, and again, this is right about where we left off here, and all I'm doing is I'm just taking the range here and cutting it in half, and then just cutting it in half. So yet again, so we get these nice quarters, and you just kind of look at the price action here and go, well, let's see here. If we get up into the, really all I'm doing is kind of emphasizing the premium of the premium and the uber discount of the discount. So okay, well, if you're a seller up here, well, you know, if you're short-term trading, when you get into a range like this, I know, right? It's like right out of like, oh, okay, let me flip to the book. Okay, what to do in a range? Well, we want to sell at the highs and buy at the lows. And I know that's easy to say, right? It is easy to say. To do it, well, can you do it, right? So would it be just moronic to be doing something like that? Well, if you're a buyer down here with a target at the high, you know, the idea is not to do anything silly, right? I mean, you don't, oh, Jesus, maybe you could make a case here that you stalled here. You got a little base rally, kind of a pause here in the market. But you're going to have to, if you're doing that, you're going to have to be, you know, placing your stop kind of out in the middle of nowhere, which is the negative here. You don't have any structure to really play off of or to consider, right? Because we just go vertical here. So there is no, I mean, maybe, you know, if you wanted to dig in, well, I'm on a 60, right? Maybe you make a case that you've got a little bit of a pause here, but then you'd be down here going, shit, am I going to go under it? There's 2 to 1. You're kind of stuck here going, okay, well, if it breaks this low, right? Well, like here, we can see that we had a liquidity grab right here, right? That's all they did, right? So in the same way that I would tell you, this is just a horrible place to buy it. This is a horrible place to sell it, right? Why, right? You're making yourself vulnerable to it, right? So, and how do we know the retail got bent over here? Well, look what came off of it. Same thing here. How do we know that they got bent over here? Look what came off of it. Right? It's not hard to deduce. I mean, of course, right? Trading is so easy after the fact. Is there anything easier? I completely appreciate that, but it's just you want to see it so that you kind of burn it into the brain. Like, okay, I've seen this before. I know that's a dangerous place. Not that it's impossible that it rally from there, but that's a dangerous place to enter the market. And you're going to be, you know, you're going to have your sphincter so clenched the whole time. You're going to be checking the price the whole, oh shit, oh, is that it? Oh shit, should I get out? You can't relax and just enjoy it, right? You're just going, God, I did something I know maybe I shouldn't have done. And so you're checking it. It takes all the fun out of trading. It just becomes a stress bomb, right? Not the thing to do. But can you trade down here like this? Well, again, right? If you're willing to say, okay, well, I'm going to let that stop just be I'm just going to trade my wallet, not the market. You're kind of stuck with that here, right? Same thing on the other side, right? Where's your stop going to have to be, right? What did they, let's get you out of here. What did they do up here? Oops. It's the exact same thing, right? You can, if I do it this way. Come here. Oh, it's just liquidity. We know what it is, right? So what did they do here? The exact same thing. Do you see what they do? Right? And they, like, it's, you know, it's not a cabal like it is against you. It's just, this is reality of trading. You don't want to buy up here. You don't want to sell down here. You want to do the exact opposite. What is the, well, I shouldn't say it that way. What does the inexperienced trader do? Oh, breakout. Never met a rich breakout trader. At least I haven't. Okay, so do we have a count here? Does it matter? It doesn't matter. What it is. It really true, and I don't say that to be glib or because I don't want to put the effort in to do it. It's there's no point to it. It's not going to give you any advantage here, but there's probably some sort of WXY or something along those lines. But at the end of the day, it's just consolidation, right? So one thing we do know is that from consolidation comes expansion. So this is, the tighter the coil, the bigger the spring, right? So there's potentially here. The upside is still very much there. I mean, this thing can fly. And we're kind of, well, aside from being bullish just because, I'm going to assume the majority of people watching here, although I shouldn't assume that, right? I get so much bear commentary, like, you're always long, you're always wrong, right? Well, but I'm going to assume that for the long haul, right, the majority of people here, if you're watching any of my content, you want crypto to flourish and thrive and go. All right, maybe what do we got? I don't know how many thousands of crypto coins we got. 99% of them all going to fail, but the majors are going to fly, right? And that's why, for the most part, I focus on the majors. Sure, you can get. I was down looking at. What was I looking at? Baby Doge and Pepe coin, and it's just, can you make money there? Yeah, so. Right, I don't want to discourage you from going there if you're a skilled technician, but is Pepe coin, a Baby Doge and Pepe coin going to be around the long haul? Well, I don't know. Maybe I'm wrong. Maybe I'm just an old fart. Could very well be. I'm just too old to appreciate it. I am an old fart. Just had a birthday, 62. All right, so fib number. That's why I'm looking at it. Okay, so as we sit here, 1, 2, 3, right? We can get so you can get the subdivision to work. And sideways 4, right? We want this kicker because it gives us clarity. Okay, well now I know where I am, right? There's no oh, is it what? Oh no, there it is, right? I got a 1. Now I don't have this, and already you can see like the 2 to the 4. Whoa, that's all wrong, right? But that's why we had it this way. We had it 3, 4, 5 because this is all self-contained. But this as the 2, it's possible, right? I mean, it would be a high-class problem if we came out of here and we're going into the 3, but I'm reluctant to do that, right? So I've adjusted my primary as a result, even though I'm very aware. It's not like, I get this, right? So you don't need to send me a bunch of comments, right? I get that is completely out of whack, right? In terms of the right look. But I'm very reluctant to put a 2 here, right? Just based off that price action. Okay, well, so I've covered that. Well, we do get a little break, this break of structure here. So this, despite being, oh, come here, right? I'm trying to straighten that out right there. So after the break of structure, we look for a retrace, took out the lows here, so we can confirm this as a good high, right? As a good break of structure. Now, where's our low? I mean, some will take it all the way back here. Really, I guess my point here is let's get this done. Let's get this done. Then we know where we are. Well, then we got a completed impulse, and even though I have shit, I mean, if it here, I will tell you this: if this really rockets, I'll be back here. We'll just swap it out, and we'll say, well, it was one of the most unusual 2s I've ever seen, but there we go. 2 it is. I wouldn't want to be betting on. Well, I shouldn't say that. If it's me here, I wouldn't be anticipating 2 into a 3 that we're going to go 1.618 the length. I'd be a little bit more modest in terms of what my expectation is here. But look at the equity markets today. It's just volatility, the likes of which we have never seen before. What's happening in the stock indexes with the 0 DT options is we are in a whole new game. Right, and it's not good, bad, and different. It's just different than it has been. We have swings, the likes of which you look at the S&P, the Nasdaq today. What are we at? 14 in the ES, 60 in the NQ. The YM is essentially unchanged. But if you look at the intraday range, it's absolutely incredible, right? And just incredible volatility, right? It's all a function, right? The tail wags the dog, right? They buy the calls. Market makers, who are they buying it from? They're buying it from the market makers. They have to hedge. Their only objective is to stay delta neutral, so they got to buy futures to offset the risk because the retail is buying the calls. And it may not all be retail, right? There's plenty of big dogs may be buying calls as well. Who are they buying them from? Not retail. They're buying them from market makers. They got to hedge. What do they got to do? They got to buy futures, right? Because they're on the other side of the calls that they sold. So you're seeing these swings, right? You see it start to come down a little bit, right? So most of the profit being taken so they can unwind those long futures. That's why it's just crazy right now. Sadly, that volatility is not being reflected here in crypto, at least in the majors. I mean, this is all, okay, we're going to get BlackRock's ETF. Oh, no, it's nice. They got to go back, start again. But, oh, maybe it's coming anyway. Oh, no, we got to start again. Oh, now we got the Fed going. Oh, right? We can't seem to break out of this, but we will eventually. The one thing I can tell you is we'll break out of here one way or the other eventually. And it wouldn't, now, so just to wrap up here, if we broke down this way, well, we'd be revisiting this as a potential 2 again. Now, how you... Boy, is that going to be butt ugly, but I suppose you'd have to live with it, something like this. That would be disappointing. This, I think, is here I say this, watch it. I think that's the least probable, that we're just going to roll over here and that this is going to be the 5. Actually, you probably have to put it here, right? Just to balance the time, right? So that the time factor, right, would be here, and this would go A, B, and we're going to come down for the C. That actually, I would probably say that would be more probable that this is A. God, that's awful. A, B, C into the B. So we went A, B, and we're going down for the C for a 2, right? We've got this. Oh, I wouldn't use that. But if for any sort of little pause here, maybe, what would I? Why would I do anything other than this, right? Where's the most probable location? I do it that way, right? Wouldn't you be looking down here? I know I would, right? Just like exactly. I mean, literally exactly what we saw here, right? Same thing, right? This was. Oh, pardon me. Oh shit! I got to go out to a 4 here. This one. Same thing, right? Exactly the same thing right here, right? What are we doing? Shit, we're all over the place. We can't get out of it. We're stuck in a box. What do we do? From the box to the 50, right? So what? See, I look at that and I go, okay, why would you assume something else? I mean, if you're a technician, okay, well, we retraced exactly to where we'd anticipate, had an order block there as well, right? A perfectly valid order block. Now we're going to go again. So you're going to assume it's going to do something totally different. But the market doesn't have to do anything, and it doesn't have to repeat itself. It's just wouldn't that be a good starting point? And that's so much of what we're doing here. Yeah, I think people sometimes misunderstand what I'm trying to do here with these videos. We're not trying to give you, oh, here's the buy, here's the sell. That's never what we do. We don't do that in the Discord as well, although there's plenty of trade setups that are in there. It's always the methodology. It's the okay, well, is this duplicatable? Can I apply this to any chart, any time frame? Can we replicate this so that you have something that becomes a skill that you can apply to any market? Doesn't matter. What the asset literally makes no difference to me. I literally don't care. All I care about is volume and volatility. I don't want something that's dead, that's going sideways. But the method, that's what we're teaching, right? That's the whole thing. That's everything we're doing. And now we're adapting to what the market is asking for to a large degree, right? So thus the market structure, you see me introduce the market structure more and more and more. In fact, the foundation of the course I'm working on right now, just to adapt to where the market demand is, right? It's not because the Elliott Wave has lost its effectiveness. It's just the interest among, what would our market be? The traders that are newer to the market, they're coming in, they're hungry, they want to learn 25 to 45, right? You have some capital to work with now. So, okay, well, you don't know a lot about trading. Probably heard about Elliott Wave. Maybe you don't know the details of market structure and, SMC, right? Which is so popular right now. By the way, smart money trading, smart money concept, market structure, what do you want to think of it? deceptively simple, right? It's not as easy as it looks at first glance, right? I would just caution you that thus a tool. Well, neither is Elliott Wave, come to think of it. Thus, tools like Motive Wave or even TradingView's got an Elliott engine in, but ultimately you want to learn how to do it yourself, and then the software just becomes an efficiency tool, right? And often you'll see something in the software that you won't like, and because you have some skill set, you'll say, "Oh no, that's a triangle. That's not ABC. That's A triangle BC." All right, digress here. Okay, so we've been over Bitcoin. Let's go to ETH. Actually, ETH I think is a little cleaner here now. Oh shit, I meant to have that off. I'll bring this in after we do a little Elliott analysis here. You can see here I've got a little market structure on this. So, okay, this I think is actually a little bit easier to read. Got a 5, got a 3. I mean, we've been over this many times. So we can look at this here and say, is this a 5? Well, you can certainly label it, right? Certainly it's a valid 5th. Certainly valid. But you can also go 1, 2, 3, 4, 5 and get a 1 here. I just think here this plays a little bit better. And again, it's based on where are the retracements, right? So here's 50 to the tick, right? Where are we looking for a 2? 50 to the golden zone. And then we go from here, right? Say, well, if that's the 2 and this is the next 1, what do we do here? Now we're going golden zone. Right, so it's retracing right to where you'd anticipate it. Here we got a little order block there as well that was an entry. And then, by the way, what comes off of this? Right, so here's the actual fact. Let me show you this, because I had to refine this myself. So if you look here, where's the I don't particularly like that language, order block. Where's the demand zone? Well, here's you want to think of it as the retrace before we go up. Well, there's a couple of things that you want to use to qualify it. Okay, well, so if we come off of it, here, let's do it this way. So if we the first thing we want to look for, all right, let me slow down here so I can get this to you. First thing, if this as an order block, the first thing we want to look for, did we sweep the lows here? We did. Okay, now as we come out of that, do we get some imbalance? Oh, pardon me. Oh, wrong spot. Right here. Right? Okay. So you see, we grab off of the lows here, and then we go into this little section here where we have this imbalance right here. If I bring that over, right? So you can see, I should probably change that color. Well, let's just make it gray. Oh shit. I want the center. There we go. Okay, so we've got a little grab of some liquidity here that leads to displacement, right? So that's SMC speak, right? Who's right? Bears getting displaced. So we get the big push here, right? It's an imbalance. Now we come back here, correct the imbalance, off we go. Now we come all the way back down here. What are we at? Now I refine this down to the wick, because if we use the whole candle, if I pull this out of here, it's already been tapped. Right, mitigated, as they say, right? It's already been tapped into, right? So any unfilled orders or any defense here has been tapped, right? So the mitigation here, you wouldn't necessarily look for that twice. So if we refine this down to just the wick, that's untapped. Well, now we tap it twice. Up we go. Now we come off of there. What do we get? We get a nice 5, right? So 1, 2, 3, 4, 5, right? It has the right look. Perfect, right? Look, I mean, can't ask for them any better. So if you were down here going, oh shit, I don't know, maybe that looks, see, maybe I'll get a 5 out of there. Well, you sure got a good looking 5. Now, is that your 2 being done? Well, doesn't quite look like it's done. Well, I'm on a daily here. Let's go to the 4. We look like we're done here. It's like that might have a little more to come. Well, again, it's okay. This is not rocket science. Where's the highest probability location for the 2? Right, when you start there, right? So anything other than right here is a little bit of that'd be normal, right? Normal is come to the 50 to the golden zone. Not that it couldn't go deeper or be more shallow, but wouldn't you start at Abby normal or at normal? Leave Abby out of it for a minute. Okay, some sort of. Oh, fuck. It looks like you have to do some sort of WXY. It almost doesn't matter, right? It really, right? So don't be. I mean, if you're a student, right? That's one thing, right? But at the end of the day, okay, there's some sort of a 3 there. It's correcting that. does it really matter how we label it at this point? We've got a 5 off of this. I'd propose no. All right, and I'm not saying be lazy with your Elliott. I'm just saying W, X, Y really doesn't matter, right? Here's the swing. Let's see. Let me put this together so we can look at it fully. Right? Here's the swing low. All right. So what do? Here's that little demand zone, right? You see how it starts to come together. So here's that little demand zone that I just took you through that tedium of looking for. Oh fuck. Okay. All right. What are we doing? We swept the lows. We got the little. Okay. Well, here, where does that happen? Do you see? This is kind of where I'm going with as we evolve as educators. How Elliott Wave, fib relationships, geometry, median lines, all dovetails. It just fits perfectly into market structure. So when people say, "Oh man, I just do market structure," well, you're doing Elliott Wave. You may not realize it, or if you're doing Elliott Wave, you're doing market structure. You just don't realize it, right? Market structure is not new. Now there's some nuance to it. There's some of the really strong traders that are. There's a gazillion of them that are teaching, right? There's some sophistication to it, and certainly ICT is, you got to give them props for turning this into. I don't know anything more popular right now than market structure between all the technical approaches there. So again, that's why we start to incorporate. But I'm just kind of showing you that's really what I'm doing here, saying you've been doing it already. If you're trading Elliott, you're trading market structure. If you're trading market structure, well, you may not be counting 3s and 5s, but likely you're looking at impulses and corrections. Same thing, right? So what's an impulse, right? Break of structure, right? Higher highs, higher lows. What's the correction? Change of character, right? It all kind of dovetails in. But here, do you see how we've taken that and added it in? You go, oh, wait a minute. Oh, by the way, at that golden zone is a demand zone. Oh, by the way, down here, well, shit, we probably have the same thing here. Probably have the same thing right here. So where would if we were going to look for an order block, we'd probably refine that thing down, right? So it's untapped, right under the golden zone. Well, let's get in there. We go a little bit lower there as well. Okay, so why, right? Do you see how we... that's annoying. Okay, do you see how we ran this liquidity here? Right, so let's get that in there, right? So here's liquidity grab, right? So weak longs get taken out, right? Then up we go, right? So here's our order block. I get the whole thing in there. Now, all right, we've had a little sweep of the lows here. Now this takes a minute to get out of here, but once we get out of here, what do we get? Right, I'm sure you can see that. Right, we get the imbalance. Right, so we know we have a good demand zone down here, order block, call it what you will. Right, we know we have it because we have the criteria. Swept the lows. Right, we caused displacement, imbalance. Now the market's likely going to come back to. Right, market doesn't like to leave that. It's like a vacuum. Right, we come back and refill it. So if you're looking for an entry into Ethereum. Oh shit! I should probably here. Let's label this here. Give me a second here. If you're looking for it, now hopefully, right? All members would all have already done this. That's a little fat. Let's get that down. We're going to micro here. Okay, so I got a clear 5, right? Is there any question of, like? I'm going to guess we're not going to dispute whether or not I got an impulse here. Right? We got an impulse, right? So okay, what are we going to do with that? Well, after the this is, all right, I'm trying to dovetail these in here. Higher high, higher low, higher high, higher low, higher high, right? Now, all of a sudden, right, that pattern, right? So what do I get right here? It's not to be, all right, so is that perhaps, let's just use something simple here. All right, so perhaps, right, higher high, higher low, higher high, higher low. Whoa, wait a second. Something changed. Change of character, right? Is this 1, 2, A, B, working on the C, takes out, we get a little change of character. We're coming, we know where we got a destination here. We have an untapped order block down here. If I put it right back in, right at the golden zone. Oh, how could we get there? Let's see. It looks like we might be able to 1, 2, working on 3, 4, 5. I'm getting that wrong today. All right, we get that. Let's go. I'll put it in yellow. Right, we get a. So let's get there differently. Let's do it this way. Looks like I can get a. Can I? I'd rather get that done as an A. Yeah, let's see. Let's go to a 1 here. Can we complete down here? That looks a little better. Okay, so now we can see it. All right, so let's get A. We got an A, clear 3 here. 1, 2, 3, 4. Oh, shit. Could be done there. All right, so, but do we want to be done? Right, our target's down here. We don't want to be done there. Well, you know, in terms of setting up for this pristine demand zone that's down here, you got a little pause for the cause here as well. Right, we look at this. Right, but already tapped. So, I love that. Well, what would be an alternate, right? Because if this is going to go 1, 2, 3, 4, 5, which is very much a contender, what would our next thought be? Well, if I want this lower, right? I don't want to, you know, force fit something bogus in here. Maybe I'm going to do a WXY. Right? If this is done here. Right, decisional, right, again, SMC speak. This is decisional. We're going to come lower here. Right, here's the big one. Here would be the extreme. Well, you have another one down here as well. Right here, right. Ooh, if you're looking, well, just see. You don't have to watch it every day. I put an alert right there. Right, what are we? What, 1760, I should say. Maybe set it at 1780, right? So you don't miss it. You're alerted to it. If we start coming down here, you got this imbalance here still to fill, and right in the double top here. See, I mean, that's how I would approach that. Say, okay, well, if it's A, B, C, and I'm going to go, what would I be thinking here? Excuse me, A, B, C into the X. And now I'm looking for A, B, C to finish it. Off we go. Do I know that's what's coming? Of course not. Do I need to know? No. Can I plan out the trade? Right? It's, you know, in SMC they call it structure mapping. Well, this is Elliott mapping, right? With structure mapping on top of it, right? Although I'm not going into a deep dive, right? I'll save that for our course. Okay, I probably spending too much time there, but right here, boy, heads up if we're coming down here. Oh, anything else I need to cover here? I don't know that there is. In ETH, looking very good. See, it is going to, you know, it's interesting. It's going to be so interesting when we resolve out of this one way or the other. Which, if we're going higher, how we end up counting this. Okay, let me. How am I doing on time? Oh, 32. Oh, I better keep moving here. All right, let me finish with Litecoin. They've got their own mojo happening. What they're having. Okay, so all of a sudden this is getting some attention, and we're starting to see a little bit of a kick here. It's kind of a wacky TA, or I should say the Elliott. It's a little wackadoodle in here, but well, see this creates some problems here because we get a new low here. So this is. So first question is, you go, oh fuck, well, can I deal with it? Yeah, we can deal with it. You'd have to go expand this as a B because you got a waterfall that follows it that's impulsive, right? So you'd have to go A, B, C. So you got to work backwards ultimately, right? So you've got to work back from that. So okay, well this has to be the 2, right? Because we break this low, and you got to go 1, 2, 3, 4, 5, leading diag A. Expand the B2, and then 1, 2. So you can do it as a 5, 3, 5, 3, 5 diag. Now, before as I say that here, oh shit! Here I'm gonna get busted if I didn't get this right. Oh, hang on. Well, my purists are gonna get up my ass over that. Let's see if we can fix this here. So for a let's see if I can make this fly here. Shit, I'm catching myself in mid video. For a leading diag, right? And I struggle with this. I'm not a purist, right? So call me what you will, but I'm not a purist, right? So I wouldn't resist calling this a diag because 5 is, what are we at? You know, $2 longer. I'm not quite that much an Elliott purist. I think often there are times you just got to go with the swing structure. Let's see if I can fix it. I might be able to. Here, let's put this here. Hang on. I'm going to pause here so I don't bore you. Hang on a sec. Okay, fixed it. I think, right? There seems to be, at least here's, I'm digging here, almost no way to get it perfect without some small, we're on the edge of guidelines here. Now, I saved myself quite a few comments because I would have had that wrong. Because we would not have had a leading diag where 3 longer than 1, 5 longer than 3. That's a judgment call. There are times where you just got to go with it. Thus, my reservations about being such a purist. Looks like this was tapped as well. Looks like this, we reacted up here. Now, so just rework this a little bit here. Pause took me probably 10 minutes. I'm glad I didn't. I'm glad I paused the video. Okay, so 1, 2. Looks like you can make this fly. So so a diag here, contracting. You got to do this as WXY because you got to go A, B, C here. Really almost, I don't see another way to do it. So you're pulling your 2 down here. So then we're going to go A, B, C into the 3. Now here's the, if this is the 1, right, our overlap here is pretty skinny. And then there are those that will tell you, or so you can kind of work this, guideline, right? So it would tell you, well, if this was the opposite here and we hadn't overlapped here, but this was the 4. See here, we need the overlap, right? To call it a diag. Here, some will tell you, oh, well, as long as the 4 doesn't overlap right here, we don't have a diag. This is part of the 4, so you're making a judgment call here. Oh, the other thing that you would look for here just to help you with the identification. Of course, now this could change, right? At the moment, that's what we've got. At least that's how, let me rephrase that. That's what I see here. All right, so if I pull this up. In the pocket here, right, is it reacting off of this demand zone here, just a little shy of the golden zone here, it looks like a little bit of a front run here on the 50. More typically, it'll hit the 50 and then the golden zone. Here we're going a run at the golden zone and then a tap at the 50. But you'd also want to look for in a diag here, assuming this is gonna stay as a diag, the start of the 1 through the pivot of the proposed 3. So if I get that right on it, down for the 50, that's where you're looking for it. So 1, 2. Oh, you got to do this A, B, C here. You got to do an X here because you got to work backwards from this. So here's a clear 5. So we got to work backwards. So A, B, C into a B, C, right? Clear 5 coming down here. So again, working backwards, this looks like an A, B, C. It looks like actually it looks like a flat. So A, B, C, are you at 90% here? Probably not. Again, you can't expect every swing stroke, everything to be perfect, right? So there are times with Elliott where you have to compromise, right? It's just the reality of trading. At least nothing is perfect, right? So don't look for perfection. Looks like I'm a tiny bit off here. You don't need perfection, right, to be profitable. So if this is going to hold here in Litecoin as a diag, as I'm counting it here, well, we're not done, right? So if this is the 4 via WXY here, coming up a little shallow here, we definitely get a 5 comes off of that. So 1, 2, 3, 4, 5, right? Clear impulse. Well, it's not going to be the 5th, right? Because we're looking for this to be completed in a series of 3s, right? So despite the fact that we get a diag here, oh, fuck, probably screwing that up as well. Hang on. It looks like I can fix that. So we'll do the whole thing as a series of 3s, right? This is just A, B. We can do it as 1, 2, 3, 4, 5. So, all right, there we go. Saved a few more comments. So A, B, C, W, X, Y. A, B, C, W, X, Y. Oh shit, I'm making. Oh, purists might have an issue with 2 WXYs per impulse. If you got a better count, I'd like to see it because this is a tricky one. again, counts help us with anticipating what's likely next. So if you disagree with this or you've got an alternate count, I'm not saying mine is the count, the right count. It's a count is how I'm seeing it. I put the geometry on here to give some additional sense of structure. So if this is going to go as a series of A, B, C, pardon me, as a diag, A, B, C, A, right? We're going to do this. Fuck, can I even do that? I don't think I can. I've got this. I'm stuck with it, I think. That I've got to do the two combos, but I got a feeling my Elliott wizards are going to correct me on that. Here's where we sit. A, B, looking for that C. Right now, if we do this technically, which there's no reason to assume otherwise, if that's a good 5 and we come down here into the pocket and go here, I'm going to take that regardless of whether or not I have the Elliott count perfect, right? That, I mean, as far as I'm concerned, that's I got a 5, and if I do this, and I don't have a clear 3 yet. I don't have it yet. Oh, one minute. 8 hour. Let's go to a 2 hour here. I don't quite have it. It looks like I might have the A going in. So what I would want to see here, right, just using a little Elliott's knowledge here, to see something like that. Again, if I have the count wrong here, if I get a 1, 2 here and I get into a B here, I've got an A, a B, and I'm looking for a C. Okay, I'm not going to not take the trade because I can't quite get this to play perfect Elliott ball. That's, as I will remind you guys, number 3 on our list of priorities in terms of taking the trade. So you got to make your own call there. The other thing you might consider here is that, oh, so we could do it a couple of different ways here, right? Are we just in another sideways? Oh boy, it's really been going up. Well, let's just focus over here. Are we in another sideways range here? So here's the, here's the classic, oh, breakout traders, right? They love it. They love it. Oh my God, we're going to the moon. Probably not. Right, so thus the breakout trader. This is why I continually tell you you don't FOMO here, because odds are very high that there will be a retest to come back into the range. Okay, does a bunch of supply come in here? If not, okay, can we hold here? We got some structure, something makes sense. We get a little demand here. We come into where an algo is going to fire. Right, algo looks like it's going to fire right where there's a demand zone. You got an algo here that fires. I mean, I take that trade. It's up to you whether or not you're comfortable with it, but that's, we're still on a 4 hour here. That's a trade that I'll take because I've got clear targets. I've got a pattern I see, I can understand, I recognize. Am I going to put a stop down here? Definitely not. There's an well, where does it get invalidated? Right here, right? That's the lowest point. I wouldn't use that. I'd use a 707. I'd probably put it right in this range. If we come down here, knowing that we could go deeper here. If this, and plus, since it's a diag, you might anticipate that it's going to go back, right? If we're trading it as a diag, maybe it's golden zone. Maybe we go a little deeper, 786, not uncommon in a diag, and then you get a bigger rip here. So it's very possible if you want to trade the golden zone, you'd take a small loser here and then reevaluate, right? What does this look like? Why would you even consider re-entering there? Because if this comes here and this is a 5, and then we get a little 3, and then we come down and we get right, you thought it was a 5 and then it has another leg on it, right? You thought, oh, okay, and then it comes a little bit lower. Well, okay, maybe you got an expanded B, something unusual happened here. You just got a little, it almost doesn't matter, right? So if you like it here, okay, well, then if I come out of here, do I get that started again, right? So ideally, you'd get, oh, come here. You'd get this, right? Just a whiff of like, oh, okay. Lower, low, lower, high, lower, low, lower, high, lower, low. Oh, wait a second, change of character, right? And I come back down here. Perhaps you've got a demand zone here that you can tap into here with this being 1, 2. All right, what are we looking for? 3, 4, 5 to complete the C. I got a nice target here with the median lines, although we'd be getting kind of pressed here on the side. I'd probably draw another set. Right here, depending on how far that goes, right? So I get another set. Maybe I can get there. Maybe I can get to the dominant. I know if this rolls too far away from the median lines here, you just got to redraw them, because this, right, the 80% was realized here, right? So it's already been burned. Now it's still giving us a nice framing of the market as we move through this proposed diag, as I'm counting it as a diag. All right, holy shit, I went too long there. A little fortunately, you guys didn't sit through that as I reworked that. Still, it's not my favorite count, but there it is, right? Very tradable. I think one to keep an eye on, right? If you don't want to, it's more. You want to buy something that's at 86 or something that's at 30,000, right? Certainly some interest in Litecoin. Percentage return is all that matters, right? Whether you're buying it, but you can probably take a bigger bite down here. All right, guys, keep the stops in. Don't do silly things like, watched it a lot today in the S&P, right, where people are moving stops and the thing just goes and goes and goes, right? Where it's just a different story, right? Taking a stop is just exercising discipline, right? Disciplined traders are the ones that succeed. So don't look at the stop as, oh shit, I was wrong. God, I'm an idiot. Take it as, I'm exercising my discipline in money management here, and I'm not letting something get away from me that can damage my account. Stops are reality, right? Don't avoid them. Don't try and trade with a 2-tick stop, but don't avoid the stop. Take the stop, reevaluate. Okay, guys, with that, have a good weekend. We're back. Let's see, the live streams have been going pretty well. Every Wednesday with members, we'll be back on that. And if I see something during the week here, we'll jump in and do something as well. Okay, guys, have a good weekend. I appreciate you taking the time to watch these here. I always hope you get something out of it. I get plenty of comments, so I appreciate you guys watching, and I appreciate the thoughtful commentary. All right, guys, have a good one. Catch you next week.